US dollar weakening, like Scott was just sharing with you. Here, the dollar index on H4 time frame at that 93.70. I think just yesterday I was telling you that we might see it come down lower to test that 93.56 level. I think that still holds. So that view likely to still maintain. But what could move markets, looking at it here, forextradingasia.com. I think I haven't been telling you much about forextradingasia.com. So I think most club members, although you get all that info with what we're posting, you haven't really signed up for this. So make sure you jump on. This is where we post up, all the analysis, a lot of the write-ups on currency pairs, on news being released. Obviously, click on the Forex managed account by Forex Briefcase here as well. All the news is there just so that what happens is you're all retail traders. If you are trading, you get back from work, you still don't know what to do. This is the snapshot view, the quick analysis, so that you get an idea of what's happening in the market before you jump in without knowing anything. So this is the one-stop shop to get all your information. What you also want to do is make sure you register for an account, log in to read the articles, and then you can rate it and get your points for that as well. With that said, looking at the economic calendar, what we do here is that on Tuesday, we just had the meeting minutes. You can see nothing much else happening from here all the way to tonight, where we do have some ECB members speaking. I don't think it's going to do too much at that point. Building permits for the US was 1.721 M, expected 1.68. Not a big change. Building permits, as Traders Club members have been telling you since last night, gives us a bit of a front leading indicator into what the markets could be looking towards. At this point, looks like there's not a big change for the US in terms of sentiment, but what you're going to pay attention to is whether this number is going to change significantly. Small changes are not going to do too much in terms of pricing. But with the focus on the euro dollar and the euro pound, again, at 10 o'clock, we have a member speaking, not going to do too much. The main focus will be CPI. Generally, I don't pay too much attention to the inflationary numbers for the Eurozone, but because recently, I think just over the weekend or early this week, yesterday, President Lagarde came out and said that if inflation does stay high, she's not going to look at it as a transitory inflation. She's going to look at it as something more permanent. So we might see some actions come into place from the ECB. If this stays at a 3.4, we might even see it head towards that 3.6 level, because a month on month is expected to go from a 0.4 to a 0.5. So I anticipate a bit of an uptick in terms of CPI, which at this point might not bring that downward move to the euro dollar, but it might set up a downward move for the euro dollar. Canadian, I'll tell you more about that when we talk about the CAD. And then on Friday, we have a lot of Eurozone PMI numbers. The main overview is that you can see, I don't pay attention to the individual countries, but Eurozone as a whole, manufacturing PMI looking to drop slightly from 58.6 to a 57, still in an expansionary phase, but slowing down. Services PMI looking to go from a 56.4 to a 55.5, again, in the expansionary phase, but slowing down. And then continuing on, we have some US manufacturing PMI, no, not a big change. Services PMI, not a big change, or a slight increase there, but because it is towards the end of the week, and also with the way the US dollar has been weakening, I don't think a change here could impact the strength of the US dollar. So with that, what it means is on the charts, looking at the euro dollar on the H4 time frame, we've seen it break above that 1.16. Club members, I was just telling you about that last night, not many hours ago, that if it does break above that 1.16, we're likely to see it test that 1.1683, we are heading towards that. I think that because it broke 2 weeks ago high point at 1.1629, I think at this point right now, it is in the middle. It is right in the middle of that support and resistance level. But if you were to jump into a trade, you could be looking for it to head up towards that 1.1683. I would say let this candle close, let it come back onto Bollinger Band. So I think somewhere there about that 1.1641 level, a tight stop loss, 20 pips, a good take profit level, 40 pips towards the upside, a 1:2 risk reward ratio, back up towards a 1.1683. This is the euro dollar on the H4 time frame. I'll do a little bit different. I'll look at it on the H1 as well. Why I say that it might take a little bit longer to track upwards, because right now you can see it tracking back down a little bit, retracing slightly. So I think they will sit in a bit of a consolidation before moving up towards the resistance level again. With that expected for the euro US dollar, the euro pound, I think that at this point it is back up towards that 84.62 resistance. No trade right now. Let it look and consolidate at this point, possibly to break towards the upside. But I feel that the euro pound is probably a no trade for an extended period of time. As the euro dollar is climbing up, I'm seeing the pound dollar climb up as well. I'll tell you more about the pound dollar tomorrow, but as the euro and the pound climbs up, we're going to see that consolidation for the euro pound at this 84.62 resistance level. So not too keen on that right now, nothing happening there. And then just to do a quick recap, the New Zealand dollar I was telling you about yesterday, looking for it to break upwards of 70.73. So it did that. We were anticipating a good 60 pip move upwards. It has gone to that 30 already, halfway there. If you haven't already jumped into a trade, just a little bit more about that 20 pip, not an H4 trade that you want to look into, probably an H1, but I think that the next opportunity will be for it to test and break above 7146 to see further upside. So with that said, I will pass it back to you, Scott.
All right.